is Gail with TradersHelpDesk.com, and in this video I actually want to show you a trade that I did this morning on a market report on the USD JPY. Now it really highlights the importance of taking profits when profits are offered on the market. So I want to go ahead and show you the trade, and I'll be commenting on the trade as it progresses. But it really highlights your job as a trader, and basically you have two jobs. You have to control risk, and we do that with Nadex binary options. Your risk is paid on entry, so you cannot lose more than you paid on entry. And then your second job is taking the profits when they are offered. And you'll see in the video that you can use technical analysis and volume to actually identify when you need to come out of a trade. You just have to listen to the market. Okay, so here's the trade, and you can actually see that I'm long, and I went long with 5 contracts, and I actually went long at 8:26 this morning. Before I explain why I entered the trade, notice that I'm utilizing the out of the money binary options. That means that price is currently trading at 111.24, but I actually went out to 111.28. When I entered it, it was actually trading around 111.20. So I utilized a 2 strike out binary option method for entering this trade to lower my risk. And in this case, my risk per contract was only $17.50 per contract. Now, I paid that on entry, and each binary option, if you hold until expiration, will pay out $100 if price expires in your favor. So this gives me an excellent risk to reward ratio. Now I want to show you why I entered this particular trade. I'm going to bring up multi-charts. Now here's the setup. You can see that it came back to test this prior low where I just put the line. And when it did, you can see the stochastics actually went lower, even though you made a higher low in price. That's hidden divergence. What you're seeing right now is the reaction to that hidden divergence. Typically, once price has moved in my direction like this, off of a market report, I generally will bring up a 5-minute chart to time my exit. In other words, it's going to lead me into hey, should I be taking profits now or can I remain in the trade? That's the only time that I use a 5-minute chart. And it's really just to show me when to take my profits because the market may go against me. As I mentioned before, we had hidden divergence on the 15, but we also had hidden divergence in the volume on the 5-minute. You can see that as it came back to test that low, they increased selling pressure. Now that's significant because you had a lot of sellers rush through the door, but they couldn't take price lower. That's also known as hidden divergence in the volume, and typically that's actually going to show you that the market is going to go in the opposite direction, which it has done so far. Now, here's the purpose of the 5-minute chart. You can see that price has not moved above the 111.32 strike. And look at the buying volume over on the 5-minute chart. Now, there is 3 minutes, about 3.5 minutes left until this bar finishes, but sellers are actually stepping into the market. In other words, they're selling the high. That is usually not a good scenario. If they're selling the high, that means that more likely than not, price is going to go down. So I'm actually thinking about exiting here. I do not like the way that that volume is forming. I don't want them selling my high. In other words, I'm going to take profits because profits are being offered, okay? And if profits are being offered, what is your job? Your job is to take profits. Now, I'm trying to get a little bit closer to the 5-minute expiration, but I don't like the way that volume is forming. I don't want sellers in the market. I want buyers in the market pushing price up, not pushing it down. Let's wait a few minutes and see what happens here. That little gray hash mark on that volume indicator is below zero. That's what's telling me that sellers are actually stepping into this market. They're fighting here. You can see it in the volume. You know, sellers step in. Now buyers are stepping in. This is why I was waiting to see where the final result lies. Do sellers take control? Is it just people taking profit? That's what I'm trying to determine right now. See, it's going below zero again. You don't want it going below zero. Now, it can fluctuate intra-bar, which is why I'm trying to wait and see the final result of this price bar. It's going below zero again. Don't like the way that price bar is forming. Sellers are really trying to take control. There's 53 seconds left in the bar before it ends. Don't like this at all. I'm going to go ahead and exit this position. And let's see what happens after I exit. Again, this is why I exited. Look at this volume. You had a decrease in buyers and sellers stepped into the market. No, I'm not staying in this market. Now, volume is a leading indicator, okay? So I want you to watch what happens with this binary option at expiration, okay? There's probably another 15 to 20 minutes in this binary, and I'm going to actually go ahead and record all of it because I want you to watch and see what happens. And then I'll come back and explain to you very easily how to identify what happened here and why the market did what it did. Okay, as you can see, you took a profitable trade and made it into a losing trade if you did not do your job and take profit. Now, I just want to recap this trade because it really highlights the significance of taking profits and knowing your price patterns, okay? So over on the right-hand side is your 15-minute chart. Over on the left-hand side is the 5-minute chart. Notice how they made a high here. They came back and tested it on a doji over here. Now, this is significant because when they went back and they tested that area, you actually had a lower high on the stochastics on both the 5-minute and the 15-minute. But you can also see that when they tested that high, that sellers stepped into the market. You can clearly see that over here on the 5-minute chart. This is also known as a bull trap. In other words, they were making traders think that they were going to take the market higher when their intention from get-go was to take the market down, not up. So this is what is referred to as a bull trap. And I'll also be teaching both bull and bear traps next Wednesday in the Nadex webinar room. You can sign up for the Nadex webinars. They're free. All you have to do, go to nadex.com, go to webinars, and simply register for the identifying bull and bear traps with cumulative delta volume analysis. Simply click register. It will be held at noon on July 18th, and I look forward to seeing you there.